Hey guys, how you doing? Austin Hilton here with a video talking about Churchill Capital and the fact that I found some information that looks like Churchill Capital may be about 20% undervalued in relation to their upcoming merger with Lucid. So that's what we're going to be talking about in this video. So there very well could be, if you have not gotten into the stock yet, a buying opportunity here, because firmly believe that quite possibly the stock's going to go up after the merger is completed. So that's what we're going to be talking about in this video. And as always, this video is for entertainment purposes only. And if you get value out of this video, please drop a like on it and consider subscribing to the channel, because I'm here working for you every single day, bringing you these videos, always looking for new information to bring you related to your favorite stocks and just to keep you informed. My videos, I usually don't do a really deep technical fundamental analysis, deep dive. There's other people here on YouTube that do it better than me. My goal is to keep you informed and to help you make better decisions with the information I bring to you. That is my goal, to help you make more money. So with that said, let's jump over and see what I've got for you today for Churchill Capital. Here we go. Okay, so you can see that Churchill Capital right now is trading up about 4%. The Nasdaq's obviously having a really nice day. So yeah, we finally get some green days back together yesterday and today. Looks like we had a nice little run putting back together. So you can see that Churchill, just to look real quickly at their chart, 1-day chart right now, they're up 3% basically right now. 5-day chart, you can see that this was kind of the ending of some of the red days here, so to speak, and kind of starting to bounce back up real nicely. Again, we had a nice day yesterday on the 31st, as well as on looking on the now. Like if you hit the low in the March right here, the stock's already bounced up, 13%, give or take. Not give or take, it is 13%. It's already all right, here we go. Anyway, from right here to here, you can see we're basically flat right there. So yeah, so you can see that yesterday we ended a little bit. Yeah, let's see, I'm looking at right here. These are different price points on March 31st, but you can see that overall the stock is kind of reacting in normal, kind of doing what it's doing. 1 month, this is kind of traditional 1 month charts that you see for pretty much any stock you look at. Stock bottomed out, had downward pressure from the overall NASDAQ. The NASDAQ was 3 or 4 weeks plus of just some down times there. Stock rebounded back nicely, 40% from that, back up to its high in this chart to $40 on March 15th. And then on March 15th, just continued that slide back down. And really, that we've been through about 6 or 7 days, give or take. Yeah, this shows 10 days, but somewhere in here, we had kind of these red days where we put together quite a few red days. Early, mid to end March to the end of March. You had those kind of time frames there. Again, just kind of overall, I'm sure you've seen the chart a million times. Let's go really look over and jump over and see what I've got for you as far as content today. So the information I have for you today related to Churchill is that the stock is 20% undervalued ahead of its merger. Okay, so what we're going to do is, this particular author basically did an adjusted comp valuation, and so we're going to look at that. Okay, and so you can see that the stock is worth 19 more at $27.45 per share based on the adjusted comp valuation. That's kind of the low end. He also gives us up to, I think, about $35. So the stock could be somewhere in there. And as you can see, again, stock's moving up on its 1 day. The stock's moving up already. This was, so we're doing okay. Excuse me. So in the past several weeks, Churchill has fallen alongside the market. As a result, believes that the stock is 19 to 20% undervalued. Again, I think that the stock has just fallen. I agree with that sentence. The stock has fallen alongside the marketplace, right? It just has. The market has been down in the past several weeks overall. Okay, so the pro forma market capitalization is now $36.8 billion. Let's see, yeah, because there's almost 6,000 million, 1,600 million shares out. 1.599 million shares. I'm telling you, I'm not well caffeinated. I apologize in advance. This has been already kind of a crazy morning. My apologies. Okay. So again, Churchill has $4.4 billion in cash, which will be available to Lucid Motors at the closing of the SPAC merger. This implies that the enterprise value would be worth $32.4 billion. So the pro forma is 36.8. Okay. So Lucid Motors pro forma target value. Lucid expects to manufacture 365,000 electric luxury sedans called the Lucid Air per year, starting with a production ramp up in 2022. Revenue will be $2.2 billion and grow from there. Okay, remember, Lucid's going to be competing against directly with Tesla, but also there was some information that came out yesterday that the Biden administration is looking to put together $250 billion to go towards basically moving to helping the EV marketplace in general in the United States. Okay, so that's a significant amount of money. Okay, so just remember that. Okay, so Lucid is going to benefit from that as well as Tesla, etc. So just as a side note, right? So revenue for 2024 is forecasted to be $9.9 billion and deliveries of 90,000 Lucid Airs. Okay, based on this, the Churchill stock, the CCIV stock, trades for just 3.3 times EV to sales. Okay, so this is the result of dividing the pro forma enterprise value of $32.4 billion as of yesterday, March 31st, by the forecast $9.9 billion in revenue. Okay, so this 3.3 EV to sales multiple is very cheap. And the reason that this particular author thinks the stock is now undervalued. I think the stock's undervalued as well. I mean, obviously, it's undervalued. It's been pushed down by market pressure, things like that. I think it's going to go up after the merger. I firmly believe that, which is the reason I wanted to bring you this article, because I thought this was a very succinct and straightforward explanation of kind of what could happen and what most likely will happen when the merger is completed. Okay. So he's talking about this table right here. If you want to pause the video, you can see that the table. So the table over there shows that Lucid Motors expects to make EBITDA margins of 6% in 2024, rising to 11.9 in 2025 and 12.9 in 2026. So Lucid Motors expects to be free cash flow positive by 2025. According to the company's projections, revenue should grow 149% in 2023 and 79% in 2024. This also explains why the stock appears cheap by 2024. Okay, so he's talking about here how he kind of lowered the revenue estimates in the future by making some adjustments at a 15% discount. And he's just talking about how he kind of lowered his, he kind of was talking about this chart right here. So you can kind of stop the video if you want to read that real quickly and get that. But I wanted to keep this very straightforward and just moving for you. Okay. So what the Churchill stock is really worth. Okay. Compared to other stocks, apologize, I have allergies if you hear that. I apologize. Compared to other EV stocks, Churchill Capital is cheap at 3.3 times EV to sales. However, if you think 5.0 times to sales on a risk-adjusted basis, the stock is overvalued. For example, for 2024, the median enterprise value to sale multiple of its peers is 4.1 times, according to the slide presentation, page 63. Okay, however, since Lucid Air is going to compete directly with Tesla, he averaged in the Tesla valuation with the comp price to determine the CCIV stock target value. Right now, Tesla stock is at about 8 times EV to sales. Okay, so he wrote another article and he's talking about he used 70% of this figure, but I think now given the lower valuation, it's okay to use 100% of the Tesla multiple. Okay, as a result, the table above shows that the comp value at 4.1 times discounted 2024 sales is $19.49 per share, but using the Tesla multiple, CCIV stock should be at $35.41. The average of these two is $27.45. Okay, so you're looking at right now where the stock's trading at $24.05. There's at least this number's a little bit lower now. It's probably 17-18%, maybe a little bit less, give or take, because the stock's risen since he wrote this article yesterday on the 31st. So what to do with the Churchill stock? Again, I'm bullish on Churchill. I am. Assuming Lucid Motors matches its own forecast, it is worth somewhere between $27.45 and $35.41. This represents gains of 19% to 54% above today's March 31st price of $23.05. Yes, he wrote the article on March 31st, $23.05, and we've already bounced up, 3 or 4 or 5%, give or take. Okay. So looking for CCIV stock to move up once the merger closes, this might be a good opportunity to acquire cheap shares of the EV maker. So a few final thoughts related to kind of closing. You can tell I'm a little out of it today. My allergies are killing me. I'm on some allergy medication, so I'm not as crisp and clear as I usually am. I promise if this is the first time you ever see me on video, I'm better than this. It's just been my allergies are crushing me in April timeframe. They absolutely kill me. So I'm a little out of it. I'm not as well caffeinated as I usually am, but I wanted to get this video to you because I think that there's some interesting stuff here related to Churchill and with this merger coming with Lucid. I think that here's what I would say. Whether you believe what I showed you today or not, there's upside potential in this stock. And I think that the stock's going to go up after the merger is completed. And I think that it's at least a 10 to 20 plus percent, at least 10, up to 20, maybe up to 50% opportunity to pick up the stock. And if you buy it now at these levels. Okay. And so I would end with that. I hope that you've enjoyed this video, and I apologize if you've seen me for the first time and I seem a little out of it. I am. I'm usually a little bit more a lot more on target. See right there, I'm out of it. Okay. So please consider sticking around, become part of the community. I'm here for you. My goal is real simple, is to help you make more money by bringing you the information so that you can kind of know and keep up to date what's going on with your stocks that you care about. And I'll see you in the next video. See, my whole face is itching. It's just crazy. I'll see you in the next video. Take care. Bye.